Hello, everyone. Welcome back to Echo FX. All right, so it's a new week, and I know it's been a while. Actually, yeah, it's been a while. This recording or this weekly analysis, has been uploaded on the YouTube channel. But don't worry, we're actually back, guys. All right, so we're back. So if you missed us, well, apologies. Yeah, so apologies. Right. So let's just go straight into the video proper. All right. So I'll give a very brief overview of what has been happening in the market so far. So a lot of things has actually happened, but I would actually focus more on the most interesting and most recent one, which is the just concluded US election. All right. It was actually massive. So last week, Tuesday, we had the US election. Um, and let's just go back to see how. So we had the US election, the presidential US election, which was on Tuesday, and you know the final result was actually a very very huge determinant on or what's going to happen in the market. And actually, Donald Trump actually won the election, and it gave a lot of strength to the dollar, right? I'll show us on the chart just briefly. And one of the reasons why the dollar actually gained a lot of strength was because of the policies that Donald Trump actually is said he was going to bring into the U.S. system. Policies about cutting taxes, reducing inflation, um, and just amazing some things that he actually made mention of that was going to that was going to make America great again. And when he was actually announced the winner, it gave a lot of strength to the dollar, and including the stock markets and also the crypto markets. All right, so we'll look at that on the chat just in a while. So, but let's look at what we anticipate for this week in regards to from the fundamental point of view. All right, so before we actually continue, if you're yet to subscribe to the channel, if you're new, this is the first time you're listening to a weekly analysis and you haven't subscribed yet, all right, so just do so before we kick off, before we continue the video. Like this video, share with your friends, share with your co-traders, and also put down in the comment section what or probably something you want us to imbibe into our videos, to make it more interesting. All right, so just put down in the comment section. We're looking. All right, so if you get to subscribe, so come on, still give us few seconds. All right, guys, so let's go forward. Let's go forward. So this week we're having some pretty interesting red folder news. Actually, CPI week. All right, if you don't know what CPI is actually one of the major indicators for inflation in a particular region. So for example, we're having CPI in the US region on Wednesday, November 13th. And like I said, it's one of the indicator that measures inflation in the particular economy. And in this state is actually in the US economy, because we're having the CPI data that is to be released on Wednesday for the US economy. So you can see it actually measures change in price of goods and services purchased by consumers, excluding food and energies. All right. So how does it affect the market? Actual greater than forecast is good for the currency. What does that mean? If the actual, that means the forecast is actually 0.3. If the actual comes out greater than the forecast, which is 0.2, let's say the actual comes out 0.4%, what we'll notice that we're going to see a lot of strength on the US dollar, on the US dollar itself. So we see the US dollar gaining a lot of strength. All right, so that is one of the major effects of the CPI data. All right, so let's go into Monday. Monday, tomorrow, we're having deflation from the New Zealand zone. We're having a lot of bank holidays from major regions like the Euro region, the Canadian region, and also the US, the American region. All right, so we have the next day, Tuesday, November, we're having Clement count change. The Clement count change is also employment change in the Great Britain pound or in the UK region. Right, so on Wednesday, like I said, we're having CPI. We're also having wage price index and from the Australian region, then CPI from the US region. And on Thursday, we're having employment change or unemployment rate from the Australian region also on Thursday, November 14. Then we're having PPI from the US zone also. We all know that when the CPI comes out, the next day PPI is going to be released. So PPI is also an indicator for measuring inflation for producers. All right, CPI is for consumers, while PPI is for producers. All right. So and also unemployment claims on that same Thursday. We are also having the Fed to speak on Thursday too. Then on Friday, GDP from the UK region and also retail sales from the US region on Friday, lastly. All right. So hope you're excited. Right. I expect you to be. So let's go straight into the chart. All right. Let's look at the chart, what we're expecting for this new week. So it's a normal ritual we all do. The first thing we do is to look at the dollar index. The dollar index is one of the major index that actually measures the dollar itself. So we look at what is happening on the dollar, because once we have an idea of what's happening on the dollar, it ideally spreads across all other all other financial instruments. So let's look at dollar index first of all. So from the weekly perspective, first of all, like I said, let's try to mark out our major regions. We can see these major regions where the market ideally reversed from all the way to the upside. So you can see it got to this level and pulled all the way to the upside. And if we are to also look at another one, you can also see this region all the way up here too. Yeah. So more or less, you can see that the US dollar, or the dollar index, has been in a long time range for a very long time. Right? It came here, came all the way down, came up, came down, came up, came down, came up again, came down, and now it's pointing towards this level again. So what does that mean? It actually means that we could see further upsides on the dollar for this coming week. All right, this is a weekly time frame. You can see USD IDX, which is the dollar index, weekly time frame. All right, so this week we could actually see a push to the upside into the zone. Right, so let's scale down to a daily time frame to look at how we're going to join, or how we're going to enter into this trade. So let's look at it. Where is the most recent, since we're looking for buying opportunity, right? And I've established that on the weekly time frame. All right, so we're looking for more buy. So where is the most recent level that we can buy from? So let's try to mark it out. So I can actually see this level here. There's a brief level at this region. You can see how price responded at this point, right? You can see how when it broke, came all the way to retest, came all the way down, came up. You can see how it sold before it finally broke above. Even retested it at this point with this candle, then further upside. So let's scale down again to a lower time frame. Yeah, this looks good. So where exactly are we, or should we join a buy? All right, let's go to a daily time frame. Well, from what we can see, the most ideal level or ideal point to join a buy is this zone down here. You can see how price reacted to this point when it got here, broke above it, came down to retest it, and is pulling all the way to the upside. So what can we ideally see? So this is what we can ideally expect. If the market comes all the way probably to around this region, it's actually going to be a good gift. Market is gifting us a very good opportunity, right? If we see a retracement, which is actually going to be very beautiful, then we can take a buy following all the way to the upside. All right, so easy as that. All right, so if you're buying from this point, where is your risk level? When I say risk level, I mean your stop loss level. Where is your stop loss level? Just ideally below the zone, right? Ideally below the zone. Don't put it just too close, because there's liquidity. When I say there's liquidity, I mean there are people stop losses here, and they're like others around this region. So you want to allow the market give a little breathing space. If you're buying from around this point, give a little breathing space for the market to in case the market just comes down to take out liquidity, then pulls all the way to the upside. But on a basic and easy level, you should be buying somewhere around this region. All right, there are a lot of imbalance around this point, so at least on a lower time frame, all right, which is actually good confluence for us to keep buying. All right, so just around this region, when the market sells a little bit, look for a bullish candle close. All right, for conservative traders, look for a bullish candle close. If you're aggressive, you can just take a buy, your stop loss below this level, since you are in the trend. All right, you're trading with the trend, you are following the vibes, you're following the motion, or you're following the waves of the market. All right, so just look for buys around this region, and further upside. All right, you take further upside. So I won't give a second a second an alternative for a sell, because from what we can all see, the dollar is actually going to keep buying for a period of time, right, due to the influence of the newly elected president of the United States of America. All right, so just keep buying, all right, because, and I'm saying that confidently, because you will see the stock market, which we'll look at in a very short time, stock market creating all-time highs. We can see individual stocks creating all-time highs also, like Tesla. We can see Nvidia, we can see Apple, Google, all pushing, giving a very strong momentum to the upside. And the president was just sweared in just last week, all right, or this year, last week. Now imagine the kind of momentum it's going to give to the dollar, going forward. All right, so I'm actually pitching my tent more with the bulls in the market. So let's look at Euro USD quickly. Right. So Euro USD, like all know, it's the inverse of the dollar index. So if you take the dollar index, turn it upside down, you're gonna have Euro USD. All right. So the same thing, the same idea on what we see on dollar index, the same thing we'll see the on Euro USD. So I mean, you'll be able to bear me witness over here. You can see that around this region is the same thing. We can see Euro USD in a range, right? The same thing as dollar index on the weekly. Let's check it again. You can see dollar index on the weekly, and see Euro USD on the weekly also. So let's drag it down also. You can see the range clearly. So it's the same thing. The or the Euro USD is actually pointing very strong to the downside, right? You can see very strong to the downside. So on Euro USD, we're looking for what? Buying opportunity. All right. It's as easy as that, guys. We're looking for, sorry, selling opportunity. Pardon me, right? Selling opportunity. So the same thing, where are we selling from? Let's scale down to a lower time frame. All right, let's look at a most recent key level. So we can see this level over here, right? You can see this level over here. So we want to see price retrace just when the market opens, comes around this region, gives us a good selling candle, then we can follow through to the downside, right? Nothing more, nothing less. All right, let's look for an alternative, right? In case this level doesn't hold, next level, the market will probably come to continue selling, because our buyers is just more sales. So these are the two levels I'm looking at. If price comes here, you see a bearish candle close, you can enter with your stop loss just above this region. But if you don't see any bearish candle close around this region, and price breaks above this one and comes to this point, and you see a bearish candle close here, trust me, you can join the sell around this region with your stop loss above this zone, right? You stop loss above this zone, and the target is where? Ideally, the target is all the way to the downside. Yeah, around this region from what we saw on the weekly time frame. We see, because price came here before, right? Went all the way to the upside, came down, went all the way to the upside, came down, went all the way to the upside. And what is it doing now? It's potentially looking at coming all the way down. So let's just, so that we are not too greedy, want to exit before price gets here, because you can see previously that price did not come into this region before it pulled all the way to the upside. So it could actually just come close, shy away. It's not a line, it's actually a region. All right, so it will come here, then shy away back to the upside. So we are not being caught up in a reversal. You want to exit as before market comes into the zone. All right, so that is for Euro USD. So let's look at USD JPY also. Right, let's look like clean chart USD JPY. So let's go to weekly time frame. Let's look at what USD JPY is doing. So what do we do? First things first is to pick out our most important and key level. So we can see this level here, right? So you can see this level here, how price responded here, responded here, responded here, broke above it, we tested it, and actually broke above it here. So price is actually currently sitting above this key level. So where's the next key level? Down here. All right, so where's the next one? To all right, the next key level to the upside is somewhere around here. Yes. All right. So let's go to a daily time frame. Let's try to observe. So you can see price has broken above this previous key level. And what can you observe also? You can see that it has retested. It broke above it here. it came back to retest it, and what pointed or pointing strongly to the upside, right? So what do we expect? We actually anticipate further upsides. Yeah, further upside is what we're looking at. All right, further upside is what we're actually looking at. So where are we going to buy from? That's the next question. Where are we buying from? So let's look at it closely. Right, it looks like market is trying to come all the way down, back down here. Why? Because of all of these imbalances caused by the election on last week Tuesday, or yeah, that was on Tuesday, Wednesday morning, early hours of Wednesday, right? Last week, because of the announcement, it caused a lot of push to the upside. So the market is just trying to cover up the imbalance, right? Then continue pulling to the upside. So how are we going to get in? Easy, allow the market to come back into the zone. Although there's an imbalance, the imbalance is around this region. Let me just mark it out. Somewhere around here to here. Yeah, so there's an imbalance around this region, but any bullishness you see around the zone, let me delete that. Right, any bullishness you see close to this region, you can join a buy further to the upside. And where's your stop loss? It's just below the region, right? Below the region. Yeah, it may be too wide, but I mean, it's better to be conservative than to be aggressive. But if you want to be aggressive, you can put your stop loss just a little bit below this, lows over here, right? A little bit below. But if you want to be if you want to be aggressive, put your stop loss just below this lows. If you want to be conservative, just below this region. All right. But ideally see the market coming all the way down first. Remember what we saw on USD IDX, that we want the dollar to be weak a little bit, right? Let's check it again. We're expecting a sell first, then a buy. So it's the same thing on USD JPY. So if the dollar is selling, USD JPY will also be selling. All right. So when it sells a little bit and you see any bullishness, then what do? You buy. So if the US IDX is buying, USD JPY potentially or ideally could actually buy, or should actually buy also. So we're looking at something like this: a sell first, then what? A buy to the upside. So if you're buying, your first level target should be this region over here, just before this region, before this price. You're buying from here. I mean, that's actually a lot of money actually. If you ask me, that's like 400 pips thereabout. So that's a lot of money. So you can actually join the buy all the way just before this region here. So those are the instruments or the currencies we'll be looking at. Let's look at gold also, right? Let's look at gold. So gold actually has been on a very strong upside, right? You can see throughout this year, gold has been pulling up, has been massively buying, right? I have a friend that will just keep saying, buy gold. Whatever you do, buy gold. Just keep buying gold, all right? So you can see gold has been on a massive upside. So, but due to the election last week, the dollar was strong. What happened? We saw a sell off on gold. All right, and it's quite interesting because fundamentals actually fuels technicals, all right? Because you see gold selling into a support region, and what happened? It rejected back to the upside. So let's check it on the 4 hours. You see that there's a region here. You can see how price used this level to sell multiple times, broke above it. You can see how gold came into the region, and what happened? Pulled all the way to the upside. So there could be a potential for the upsides on gold. All right, there could be a potential for the upsides on gold, but we need to be very careful because we are expecting a strong dollar. Right. The reason why I say we need to be careful is because we've seen situations where the dollar is strong and also gold is also strong. Right. We've seen that scenarios multiple times, countless times in the market. So that is what could potentially happen. So this is what I'm actually looking at for the gold market. So we could potentially see a sell-off into this region, and what happened? We could see gold, further buying, right? But if price breaks above this zone, you could see some further downside on gold to somewhere around these lows here. We could see further downside to somewhere around this lows, somewhere around here. Yeah, just somewhere around here. So if you want to sell, Just wait for price to take out this region, then you can sell down, further down. But if not, if you see any bullishness around this region, trust me, you want to keep buying gold to the upside. All right. But long term, gold is actually to the upside. All right. So let's look at one indices lastly before we call it a day. All right. It's going to be an interesting market next week, which you don't want to miss for anything. All right. So let's look at US 100. So you clearly see how US 100 has been pulling up massively. This is the highest point US 100 has ever traded to since the inception of the Nasdaq or the US 100 instrument. All right, this is the highest point. And when the market is trading in an all-time high, you need to be careful because you don't want to get caught up in a reversal. One, and if you say you want to sell, it could keep pulling up, right? So you want to be careful, really, really careful about the market. So although from the fundamental standpoint, what I'm actually anticipating is some further upside because first thing first, we are looking the US dollar or the Federal Reserve. They've cut their interest rate by another 25 basis point last week, which makes borrowing costs, or interest on borrowing costs lesser. So we can have more companies, going forward to borrow money and pay a lower interest. All right. So and also the taxes, since Donald Trump is planning on break or cutting down taxes for in the US economy, you have opportunity to borrow money and even pay less taxes. You understand? So I can actually see the stock market going further up. So how do you join in the buy? It's looking at the fact that it is way long stretched out. All right. So what you want to do is you want to buy at any retracement, or you could actually use something called the moving average. All right. You can see the moving average, how price retraced into. I have one that I marked out. All right. Yeah. So we can see how price retraced into somewhere close to the moving average, and what happened, kept buying. On Friday, we traced, and what happened is pulling up. So you can actually see further upside, or if you retrace to this to the 50 period, or this red black one you can see is a 50 period moving average. If you trace into that level, you can actually look for buying opportunities further to the upside. All right, guys. So that is how, or the outlook, or the perception of the market for this new week. All right. So I hope you have a profitable and an amazing November, right? Or an amazing and a profitable week. All right. Do help to subscribe if you're yet to. If you stay till the end, all right, subscribe. Come on, subscribe to the channel. Like the video. I'm sure it was quite interesting. Even I myself enjoyed the video. All right. So come on, like the video and also share with your co-traders. If you have a group of friends that you trade together, or maybe you have your family members trading with you, or you have a group where maybe WhatsApp, Telegram, whatever group you have, and you feel this video may actually, or will, which I'm very, very confident that it will be important to your group, right? Share with them, and also let's make this money together. All right. So bye for now, guys. Stay safe and have a profitable week.